Hello and welcome back to this catalyst breakdown of AXTI. In this video, I'm going to break down the catalyst, explain why these earnings were fundamentally transformative, why the stock had a delayed reaction on day 2 instead of day 1, and what made it such a high conviction setup for me. Let's get right into it. First, let's look at why these earnings were so powerful. There were 3 primary fundamental drivers that altered the valuation model for AXTI. Number 1, the first ever positive EPS and a massive beat. So as you can see here, the single most important element of this report, in my opinion, was the swing to profitability from this quarter here, March 26, to June 26. So where AXTI reported a 19-cent per share with a surprise of 170% from analyst estimates of 7 cents, I think, per share. This milestone signals an earning inflection point. Number 2, gross margin explosion. Now, top line growth means very little without profitability. But AXTI gross margin this quarter exploded to 45%, which was up dramatically from 29.9% last quarter and just 8% in the year ago period. This margin jump proved that high margin product mix is converting directly to net profit for AXTI. And the last point was the multi-year AI lockup. So behind these numbers, like a record demand for their indium phosphide for AI data centers. Not only there is demand, but more importantly, they secured long-term supply agreements guaranteeing a multi-year revenue visibility. Now let's answer the question, why the delayed day 2 reaction? Why didn't the stock launch immediately on day 1? As you can see here, it rallied post-market, then pre-market, then it dumped on the first day, and then it took off on day 2. Well, in my opinion, when a company transitions from losing money like this to generating significant profits, institutional models need some time to adjust and digest the news. A lot of Wall Street analysts, of course, they need time to update their models, but a lot of them also wait for the earnings call to actually have more details before they do these updates. And I'm guessing what happened here is that a lot of retail traders, they sold into strength, secured their pre-market profits, and there was, of course, resistance at the open. Once Wall Street price targets were revised upward, institutional buying came in, and unleashed a massive continuation rally. Now, some key takeaways from AXTI's case. Number 1, track EPS inflection points. When a beaten down stock turns a negative EPS into a positive EPS with 100% beat or more, add it to your multi-day watch list. Number 2, watch day 1 VWAP holding. In this case, it may have dumped at the open, but it actually held above VWAP the rest of the session. So when a stock reports grade 1 earnings, consolidates day 1, but strictly holds above its session VWAP without dumping, especially, the second half of the day, it's a stock that is storing energy. Well, that covers the breakdown for AXTI. If you found this analysis helpful, leave me a like and subscribe for more catalyst breakdowns, and thanks for watching.